for RH. Sees 2019 adjusted diluted earnings per share of $10.53 to $10.76. RH hitting here at $169 now.
So it looks like beat and raise from this RH.
Said company raising their fiscal 2019 guidance. Says despite increase in tariffs and some negative macro
this
trends,
thing's an animal.
Optimistic that our business.
I remember that, Paul. Shorts, right? I'm sure there's still a huge short position in this thing, Paul. Crazy.
RH says believe that the company remains undervalued and will continue to evaluate share buybacks.
They keep buying back their own stock too.
Off the highs.
All right, so RH, you're going to see some short scrambling there. Obviously, you already see it. All right, let's dive into, welcome everybody. Interesting day today, interesting close. And like what Tree and I were discussing before I hit the record button here, I mean, this whole world is nuts. We can't expect the market to be somewhat normal. You know, it's crazy times out there. All right, and it's just, we have so much, there's no breathing room, right? We were talking about this in the room today, how you dodge one event, right? Let's say you get through like earnings season, then you got the Fed, right? Then you got trade war negotiations, then you got Trump tweets. It's like, you're dodging things from all over. Anytime you think, all right, we got through something, you could play with a clear head, boom, they throw a whole bunch of new stuff on the table there. But I want to talk a little bit about, mostly about just what we're seeing. Yeah, Brexit, ECB, it never ends, Martin, it never ends. But I want to discuss a little bit about, mostly we should talk about what's going on out there as far as price action, flow-wise, and rotation. That's the big topic out there right now. All right, I'm going to share with you guys what my feeling is, what I think we're seeing, and share your thoughts on what you guys feel about it. But here's the thing, and this is what we got to understand coming into this. What took place, and it really was magnified yesterday, but we really started to see it, start to fret up probably around last week, the early last week, where we started to see some of that rotation fester. We started to see a lot of the out of favor names see some of the better looking flow out there. All right. And, that never meant that we would finally see the names like a Roku and these software names sell off, right? Really come in. A lot of times, maybe you see a day or two of selling and they buy them right up. All right. But what I think we're witnessing here that makes this go around different than what we've been seeing up to this point, in my opinion, I think what we're seeing is a bubble that has been pierced that nobody's even acknowledging. Everybody talks about every bubble, right? You'll hear bears continuously talk about, tech bubbles, IPO bubbles, Fed bubbles. They always talk about that, right? But in my opinion, what I think we've been seeing get larger and larger, especially over the past year or so, there's been a fear bubble out there, okay? And what I mean by that is you've had, how many webinars have we talked about a huge chunk of this market, right? Economically sensitive, cyclical, financial, some of the important chunks of this market just be ignored and neglected, right? These trade war names have been straight up short plays off any rally, right? For what now? A couple years, all right? And not only that, all the money, it's amazing how this market has held up. That's the most fascinating thing about this, is that there's been a fear bubble out there, okay? But you would never know that by looking at the indices, by looking at the S&P 500, all right? But if you look under the hood, and that's what we do, right? We're looking under the hood at the mechanics of the market, right? What makes up the market out there. And we've been seeing this for a while. And what have players been doing? They've been taking money, right? Taking rotating funds out of all the trade war related names, all the cyclicals, all the financials, chemical stocks. These things have been abysmal. Commodity related names, right? And where has that money gone? Bond proxies, treasuries, staples, right? Safety plays. Nobody looks at this group that I'm about to mention in that arena, but it was software and high growth. Software was considered recession proof in a sense. Okay. So they were going into these hot software names. I mean, you look at some of these charts, right? A name like a Roku, okay, and aside from the story, forget about the story. I'm not saying by no means that these names don't have the explosive growth behind them, okay? But they've been piling into these things almost in a defensive posture, okay? Because they're not going to be affected as much by the trade war, right? They're not going to be affected as much from a global slowdown, as much as, let's say, a Caterpillar or these chemical names already have, right? You're not hearing a Workday mention the China trade deal in any of their conference calls, okay? So there's been a buildup of that fear for so long, and they've been hiding out in these things to the point where they become just extremely crowded, right? And they've been that way. I'm not saying that, all of a sudden a siren went off to tell us that these things were crowded and shorts this week. They've been this way. It was just a matter of when will there be a little piercing of the bubble. And when that time came, okay, and we talk about the structure of this market on an ongoing basis, especially those who, are members, we talk about the McElliott and the quants and all that stuff. When that bubble finally just gets pricked, you're going to get massive rotation out of this stuff, right? Everyone's waiting for the same thing, for these things to actually sell off and give a hint that they're overdone. And then just systematically, you're going to have funds come out of all these spots I just mentioned and go into all the stuff that we've been talking about each and every week on this webinar, how they've just been ignored, just totally ignored. All right. And that's what I think. It's more than just rotation. We see rotation, a lot in the market, right? We see them go in bull markets. You see them go from healthcare, then they go into tech. And this is not your normal rotation. This, I think, is, I don't even want to say pop, but a piercing of the fear bubble. And we're just seeing little hints of what can happen if that really comes undone. Okay. And that's what it is. All the positioning we talk about, right, that a lot of times gets to an extreme and we're looking for at least tradable bottoms off pullbacks in the market. That's what we're talking about here. We're talking about nobody positioned for any risk. Everybody's so scared out there to take on any risk that with their aggressive money, even with their speculative money, they're buying bond proxies instead. They're buying Procter & Gamble instead. They're buying Mondelez instead, CMG, right? All these things. And while, again, it just is amazing that, we've been talking about this and looking at this develop for so long, right? That these names just continued higher while, the cyclical and economically sensitive names did nothing for so long. And that's what's taking place here. So now the $1 million question becomes, is this the big one, right? Or is this, something that's just once the initial rotation's done, it's back to what they've been doing. All right, and here's the interesting part about it. It's all ahead of the Fed and the ECB and all that stuff, but more so, in my opinion, the Fed, and it makes sense, and here's why. Okay, what word have we heard, especially on CNBC, on Twitter, ad nauseum? There's one word that they drowned us with, right? Recession. Right? Recession. Are we going into a recession? The inverted yield curve, or is it signaling a recession? Recession. So the fear of recession is what built up, right? That fear bubble. And now, okay, you're not hearing it on CNBC. They're scratching their heads in what may be causing this rotation. But there are some signs that the economy is actually starting to turn, okay? And you're going into a Fed meeting where they may cut another quarter, right? So added stimulus to provide the gas for a turnaround in this economy. All right, and not just this economy, I think the worldwide economy, the global economy, right? You have the same thing with ECB, like you guys are talking about. They're wondering if Mr. Draghi is going to fire a bazooka on his way out. So all that's playing a part into the piercing of, in my opinion, this fear bubble, and that's why we're seeing it. And when you got a lot of players out there, they don't know what to do with themselves, right? Because it's confusing. You see a market, and you're seeing stocks that used to go up every day, regardless of the market conditions, getting hit over the head, and all the garbage go higher, and it feels bearish, right? It feels bearish because we're not used to looking at it. But I don't see, in my opinion, I do not see how, if this rotation has any lasting power, how this can be bearish. You cannot give me a rebuttal to make me feel bearish if this rotation has any lasting power. Okay, because I still have no idea how this market has done what it's done without any participation from the financials, from the cyclicals, from any of this stuff. Okay, and exactly, and you have, right, that's why the breadth has actually been strong, right? So breadth has actually been strong. And here's the thing too, like the software names are getting lumped up, not just software, but a lot of, the shops, the Rokus, they're getting lumped into the equation now. That's now, okay? Because they've been inflated because a lot of that fear money went to that space, went to those names. But eventually they're going to reach a point where, players just looking for high growth in equities are going to find, these names trading at some decent entries. Right? So you may see continued selling in some of the more defensive areas of the market. But in my opinion, because of the explosive growth, they may underperform. That's very feasible. But eventually these hot tech names are going to find a bottom, base out, and before you know it, be kicking it in the right direction again. All right. But listen, all that I said now, and we were talking about this in the room because a lot of people feel confused about the flow out there. And what do you expect coming from flow when you have half the market going down and half the market pushing higher? You think the flow is going to be one-sided? What are they going to do? They're going to just buy everything or buy puts on everything? That's not realistic. So we're seeing it actually take place in the flow. And we've been seeing it for a bit now, not just yesterday, but over the course of the last week or so at the least. All right, but the kicker here is this all comes ahead of the Fed. Okay, and if we didn't have much clarity going out a couple of weeks before the Fed was coming up here, it's even more so the case now, right? Because this Fed, God only knows, what type of reaction we get out of the market if it doesn't get what it wants. Okay. And just for the record, that's kind of, here I go again. You're going to talk, I'm mentioning him again, but what he's been on the money. It's kind of what Mick Elliott's been talking about, right? The guy out of Nomura, for those of you who don't know. But Mick Elliott's been talking about how the fear trade, right? The crash protection, all that stuff gets unwound. You get a bullish tint going into the Fed. And then, depending on the positioning, if it gets overdone to the bullish side, you're set up for a disappointment there if the market doesn't get what it wants. And there's a risk there now, right? Because if the economy's starting to show signs of being okay and possibly bottoming and turning, you might not get that cut that you want, right? Or they may not be as dovish as you would like. There's a lot of ifs in the equation, all right? But let me leave it on this note, okay? It's good to know, what the backdrop is. That's why we talk about game plan each and every week, right? And coming into this week, no matter what developed, all right, we had to keep our blinders on to at least understand that no matter what, the most prudent thing to do here, okay, is remain tactical and not stick your neck out too much, because you're going to have to hold through some of these high volatile events. And that means more risk, right? So maybe there's a greater reward at the end of that if you're right, but you can understand there's a lot more risk involved because of it. So in my opinion, and that's why, the game plan, I think, stays the same regardless until we get through the Fed and see what the flow looks like and where sentiment looks like after the Fed. I think right now what we're looking to do is just ride waves. Just ride waves, okay? And what we've seen up to this point now, right, name it. Name a cyclical, out of favor sector or name, and it's been absolutely money. Day trade, swing trade, scalp trade, just getting in the way of the momentum there, okay? The likelihood is that for now has exhausted itself, and for us at least needs a breather. At the least needs a breather. A lot of those names, right? So now you start looking towards the stuff they've been selling on the opposite side of that, and looking for snapback trades in that stuff. Okay, little by little from this point. So it doesn't mean we want to, is this rotation going to last? This flow is confusing. I can't really make out, whether this. We don't want the answer to that right now anyway, because realistically, nobody has that answer. Nobody in this world has any idea of how this market is going to react to whatever the Fed does, right? We're going to see a reaction, and we're going to see, how sweepers react to that event. That information, in my opinion, is more valuable. All right. And we start to put the pieces together from there. And that's where I think we're going to see and get the true answers on whether this rotation is legit or not. Okay. And it's something bigger than, what we've seen for years now. All right. If there's some weakness coming out of that FOMC meeting or going into the FOMC meeting in these cyclicals, okay, and we come out of it and they start aggressively buying into that, that would be our secondary entry into these things, right? That's the next spot where we would want to be buyers or look to buy any of that stuff again. All right, and if they don't, that means the likelihood is they'll be selling those. We'll probably see, I'm sure, protection and put buyers and those things if they're selling off the Fed for not just that day, but coming days. And they may, come back into the software stuff and some of the defensive stuff again. It's very possible. So we want to keep an open mind at the same time, but the key is to pay attention and try not to get wrapped up into all the noise out there, all the confusion out there, and we can't expect to get more than what the flow and the price action is willing to provide us right now. And all it's capable of providing us is an idea of possible short-term direction. Even that's tricky, right? Even that's complicated enough. All right. But, and I wanted to talk about that because, we already had this discussion in the room, but if you're a member, okay, if you're a member in the room, you have access all day to ask me. But if you're on private Twitter, you have these webinars on the weekends. If you're confused by any of this, the likelihood is you should be if you're not familiar with reading flow on an ongoing basis. And the reason why you remember is so you can ask me, and I'm doing all the dirty work and legwork and racking my brain and having smoke come out of my ears. I love it, by the way, but you know what I mean, for you. That's the whole purpose, right? So if McElliott confuses you, you're normal. Trust me, he confuses many, but just ask. There's no other way to learn anything in this game if you don't ask questions. If you're going to take the approach, you think you know it all and you could do it all yourself if you've never done it before, you're asking for trouble. I mean, that's just being realistic here. All right. So I just wanted to make sure I get that out there, especially for any members. And obviously, if you're not a member on Twitter, you get a hold of me, you can ask. I'm just saying more so if you're even a member of the Steam Room or private Twitter. And you guys know, okay, I never push for anything, for you guys to buy, for you guys to sell, right? I'm not about that. I don't even want you guys to even worry about what I may own and don't own, because I think that's a total waste of time on your end. The reason, what you should be doing it the right way, you should be processing the information I'm giving you, or flow and sentiment, and then you making decisions according to your game plan, right? Your risk, your strategy. All right. So in simple English, I'm explaining to you and breaking down in simple English what sweeper activity and sentiment may be telling us, and then it's up to you to decide whether you think it's worth firing at or not. Makes sense, right? All right. So in that case, we'll look over. Anybody have any questions, by the way, before I run through that? I did this whole thing of how important questions are, and I go through it without even asking if you guys have any questions. Anybody have any questions on any of the flow, rotation, anything that's going on right now? Squeezometer, yes. Basically, Cash, the squeezometer is basically a put to call with more criteria involved. So what we were trying to do with the squeezometer, we're trying to get as close to a reading as we can get on bought to open transactions only, non-sweeper activity. You understand? So where a put to call, for example, Cash, is just call volume, put volume. You know what I mean? So it gives you a cleaner read. Yeah, it's on a day-to-day basis. It's on a day-to-day basis. So it's read the same way as the put to call. It just gives you a cleaner read on the smaller retail action out there. Obviously, it's not going to be as accurate as we would like to a T, but a cleaner read than the put to call. That's basically what it does. That's basically what it does. So, but that's if you're wondering like the criteria behind it, it's opening activity bought to open actually only, so no sold to open, right? Nothing like that. And non-sweepers. So we could stick to smaller blocks that would likely be retail volume and stuff. Martin is saying, please optimum on this environment, riding waves on both sides, long and short swings. Okay, and that's that's a whole other thing, Martin, that becomes difficult, right? If you're looking to do both, go long and short right now, of course, yeah, it could get a little tricky. But in reality, it may be a little easier now than it would, in a normal bull market, because you got legitimate weakness out there. So in other words, you could be, like a lot of you were, right? You were looking at the Roku, you were looking at the Chipotle, you were looking at a lot of names that haven't really rolled over yet, that were possible rollovers, right? So that would be the stuff you would be leaning bearish on. And then you would be looking, towards the financials, the cyclicals, and that stuff on the long side. And it's also kind of like hedging itself out of it. But here comes the issue again, because there's no free lunch ever. When it turns, it becomes a double whammy, right? So let's say tomorrow we see that rotation reverse itself, because it's been going on for a good week now. You're gonna lose your money. So there's nothing easy out there, and that's why for me, I found it better to just concentrate on one side. And what I would suggest is, if you like to play both sides, make sure you stick to a side that lines up with what you're seeing as far as the market environment. In simple English, that means if you're day trading, you want to see a bearish tape out there, right? You want to see bearish order flow out there. If sentiment is leaning towards bullish extreme, that's even better. So you want that stuff to line up if you're looking to play the put side, on that particular day. So, I mean, that would be my recommendation if you're looking to play both sides. If you're new to the game, right? If you're trying to find your way, basically, I would say throw the puts out the window and focus solely on the call side in bull markets, and master that first before you think you can catch both sides of the market. All right. And what that means is, if you're not bullish, that doesn't mean you buy calls anyway. That means you sit in cash and wait till you see what you're looking for that looks bullish again. Right? Doesn't mean, just because you're not bullish doesn't mean you have to find something to short. So that would be my recommendation if anyone's really just trying to find their way and doesn't have experience playing the short side. Because the short side's, to say the least, extremely difficult, What other questions? I missed somebody. I can't find them. Hold on. What's up to Baidu? Yeah, and Jay, that's kind of right. What's up with Baidu is that line. It could be said about so many names right now. What's up with so-and-so? Names that have been absolute dogs, right? That we have played in the past and we couldn't get an up day out of, started to look healthy over the last couple of days. I mean, you want to see the poster child? Rig, right? This thing couldn't put two up days together for the life of it. So now you're seeing some money rotate into there. And exactly, Baidu, they were focusing on some of the Chinese software and hot growth software names, right? Lo and behold, Baidu actually pokes its head out. So that's the significance, if there's any lasting power behind this, is that there are a lot of names that have been neglected. And what that means is that's a lot of sweeper activity and a long watch list if this rotation does turn into something bigger. All right, so don't take it as bearish by no means. Okay, no matter what anybody tells you. If this lasts. When's the last time we actually we saw something like this, like a major rotation, was post-election. It was post-election, the Trump election, where, cyclicals really took a leadership role. Like I remember Goldman being a rocket out of that election. Remember, they were like, oh, Mnuchin's from Goldman. This Goldman's going to double under the Trump first term. That was like when there was some real buying behind these things. We haven't seen, since that air came out of that balloon, we haven't seen these things really catch a real bid in a long time. In a long time. Minor rotations here and there. But yeah, Jay, just to answer your question, Baidu, like many other stocks that, were ignored, seeing some flow and, showing a little giddiness here. We'll go over, save your names. We'll go over, a lot of names that have been seeing action. Some that may need breathers, some don't. So save them right now. But everybody, especially those of you who are members out there, are you still a little confused out there on certain things, or everybody's pretty much clear what we're looking for? All right, so we're trying to get in the middle of some stuff, right? The earlier the better, when things just start to get boiled. So here's an example what I mean by that, okay? And I take it to another extreme where I miss a lot of opportunities, right? So, like, for example, a Win, okay? That was one of the first names, if you remember, they came in and started buying, right? Okay, and now you got a little lift here. So we don't want, I don't want anyhow, to start buying here now. Okay, now I want to see this thing run into a niner and then maybe take a breather here and then revisit. What we want to do is we want to start to look for, initial sweeper activity that's just starting to develop down here. So you may be a little early, but, if the rotation is as strong as it is, there's a good chance that it's going to, bring the whole pack up with it. All right. So, and there's also a chance, they come out of some of the ones they first got into and they spill over into some of the laggards. We've been seeing a lot of that the last couple of days. All right. So right now, over the next couple of weeks, we want to get in the middle of some of that heat from the initial stages. If they've run too much, me personally, I don't want to do anything with them. And an example, I'll give you an example, okay? Like, for example, these banks. All right? If you wanted to, yesterday, off the open, Bank of America, right, got annihilated. All right? Annihilated with call activity. All right? So if you wanted to, and I'm talking about just getting in the way now, I'm not talking about an entry to swing for the next 6 months, okay? If you wanted to, that was the spot to get in the middle of and have the momentum possibly push you higher. You don't want to come in up here now after, already this thing has been strong off that action, because there might not be enough left for you to even get in the middle of. You understand? Does that make sense? So we're looking for laggards now. We're looking for laggards. Like, I know, Tree, you were eyeing a name, no pun intended, that, was a under the radar type thing, but this is my point, right, Tree? You were looking at this, or do you own this? You day traded it. All right, so perfect. So in other words, like, you already, nice job, Trey. You already have the rotation in place, right? We're looking at stocks already that have been running for a week straight. You start to see flow come in to this thing. It was actually, I think, a couple days. All right. And that would be the ideal spot to get in. And just like Trey did, basically look for this to lock in some profit and call it a day. And listen, sometimes it's not going to come, or it may not come as much. You know what I mean? It happens. But at least you kind of know where your risk is, your downside is, because you're not looking to marry this thing. You're looking for momentum to come into this now, right? That's the whole point. You're trying to remain tactical short term, and you're looking for momentum now. If the momentum doesn't show up over the short term, there's no reason to sit in it and wait and fall in love with it. Okay, that's the strategy. That's what our definition of remaining tactical means. All right, the stuff we want to be a little more committed to. I mean, that's what the point I'm trying to make. That we want to kind of, it's worth waiting for post-Fed, in my opinion, right now. Okay, it's worth waiting for post-Fed for a number of reasons. Okay, you have an added risk there, and you're also coming off a market that's lifted a little bit here. All right, so there could be some weakness coming out of that Fed. And why do you want to be long dated calls, with possibly the risk of that going up into the Fed? The Fed is coming up, Stephen, now in it feels like every week, doesn't it? What is it, the 17th? It's a week away. A week away. And I'm telling you, it gets more interesting by the day. You guys know me. I'm not crazy about the macro stuff when it comes to trading, but I just, I become fascinated by the positioning into and coming out of that stuff, because that really matters. And you got an interesting setup going into this Fed. I don't even have a gut feel. I don't even have a gut feel. Hussein, I don't get the link on there, but I appreciate it. What is that? Oh, CME Group. That has the countdown to the Fed. Yeah, I can't get the link off here for some reason. I see it, but I can't click on it. All right, so yeah, and so here's basically here's what we were looking at, right? Where's my chart? So you don't think I'm creating this stuff on the fly. Where's that chart that I use here? Bear with me. I think it's, hold on. Is this the daily? No, hold on. What the? It's not on here anymore. But basically, you guys saw, we were looking at a chart. I don't know why the drawing's not on there. It's probably, I got 9 different chart setups on here. I'm getting lost. But basically, you guys know what we were talking about, like something like this, okay? And this is kind of what the positioning was signaling, right? So you get a little breather here, which we got, right? So you get like almost a little flaggy type pattern where maybe they shake out some bulls. And then that's what McElliott's calling for, like a little drift higher over the next week into the Fed. Okay. But I wouldn't pay too much attention to the overall market outside of short-term trading, because I think individual names is where all the juice is at. Like the market could be unchanged, and you could have software stocks bouncing like spaldings and cyclicals coming in, right? And the market may not do anything. So the main thing is to stay tactical here. Just stay short term. Don't get greedy. Take what the market's giving you, and then just have ammo ready. So when we come out of the Fed, it may not be that day, but if there's some selling out of the Fed, and there's a chance there could be selling out of the Fed if they line up too bullish, we can do some shopping and have a little clearer picture of what's going on. All right. Very quickly, as far as today's action, you guys heard me in the room and saw me post on private Twitter. The market through the afternoon, price action did not look bullish, right? It just didn't look blah going into the Apple event, coming out of the Apple event, I should say. But the flow leaned bullish the whole afternoon. The whole entire afternoon, especially the short dated action, was all call sweeper activity. All right. And, there were some clues that over the short term, they were positioning for a squeeze, right? One in particular that caught our eye was these guys. Okay. So you can see nothing huge, but these guys have a good track record, especially when they, lean into calls with some time behind it. Meaning if they go out a month and dump in a couple 100,000, because it's unusual activity. We don't see too much call activity in the TQQQs. But when these guys poke their heads out, usually it's a pretty good idea that if the flow around it turns bullish, which it did, that they're positioning for a short-term squeeze. Okay. What I mentioned though, the tricky part about this when they're in weeklies, okay, what's that mean? How long of a squeeze? How big of a squeeze, right? That's the tricky part. So that's why I mentioned today, if you're going to make a play off it, just take it as an indication of possible momentum coming in, right? Bullish momentum coming in. And then, you get traded according to your plan, Maybe you want to see how the flow looks at the time, see how the price action looks, after a little rally to determine whether the raises stop or lock in a profit or, depending on what you're playing. But that's the annoying part when they come into weeklies. A lot of times they kill them anyhow, guys. A lot of times, like, we'll come in tomorrow and the Qs will be up huge, right? That wouldn't shock me one bit. We come in tomorrow and the Qs gap up. That's usually what happens. But I'm being straight with you guys. Like, that's the tricky part about the weekly spec action is you don't know. Like, I give an example here so you understand. I don't know if these guys, even let's say we got a bigger move today, I don't know if they locked in profit or not, right? They could have flipped them. Just because they're buying weeklies doesn't mean they're going to hold it to Friday expiration. And we see these guys flip a lot. So that's the tricky part. At least if they went out a couple months, they're not looking for just a short-term pop. They're looking for more than that. And this way you can sit a little more comfortable with it, But when you see this and you start to see sweeper activity turn bullish, you have to start to lean bullish. All right. Maybe it's not even getting long, but if you're shorting, you got to be careful. Over the short term, you got to be careful. So these are strong short-term signals. Whether you play them or not is a whole other can of worms. All right. Yeah, of course we got to talk about that. There was one bearish thing today. Even me as a perma bull has me concerned. All right. No, listen, there was short-term put action. Playing off momentum in Roku, in Shop, in Netflix early in the day and stuff like that. That stuff is not concerning. They're playing the momentum over the next half hour for all we know. This guy worries me. All right. So this goes by the nickname Neil Diamond. Okay. And when he sweeps calls, basically everybody and their mother who follows slow gets excited because he's got an impeccable track record. I sometimes forget he can sweep puts too, because I don't make a play off it, right? I'm not playing the downside, but you always have to take notice when you see an opening order like this, size like this off a sweep. Because, like I said, he's got a pretty good track record. I'll give an example. The last time I remember seeing an order like this was September before the October rollover. last year. Not to spook anyone, I'm just being honest. Before the markets rolled over in October, I think they were September, because I remember us talking about how he was early. But that's the last time we saw an order like this. All right. But as far as like being actionable for us, like what are we going to do here? Right. Our game plan is to what anyway? The playbook is to stay tactical and trade up until the Fed, right? I'm telling you that the short dated action that we're seeing is all, is all bullish. All of it was bullish the whole afternoon. So that's where, if you're unsure, that's where you got to ask me and say, Jay, what's the story here? You're getting DIA puts for December and we're getting TQQ calls for the week. But a lot of times if you stop and take a step back and look at it, it makes sense, right? The TQQQ sweep is a lot smaller in size and speculating on a squeeze now, right? And, the DIA dude, whether he's protecting or playing downside in December, think about from now till December, what the hell could go on here? This market could go to new highs, crash, go back to new highs, and crash again by December. So I wouldn't get too wrapped up in it. Now, here's something where I'd probably be singing a different tune. Again, I wouldn't be playing off of it, but I'd be singing a different tune to you guys. If we saw that DIA sweep come in, right? And then all of a sudden, this board starts to light up all red, right? Then obviously I'm not going to feel too bullish about that. I don't want to be in the way of that. So that would be the difference, But as you can see here, look at this. Okay, by the looks of the board itself, just the colors, you would think we were up a good 1% today. No, and this doesn't even take into account all the small sweeps that I post manually, right? The momentum spec players that were 95% bullish today. So to me, they were confirming the TQQQ spec sweeps and not, any momentum off that DIA dude, Neil Diamond. What about the huge SPY December 2021 put bought 2 weeks ago? You said don't ask. Yeah, exactly, Tree. It's a big order and it excites us a little bit, right? You're like, oh my God. But what's that mean to us, right? Like, what are we going to do with that? Like, does that affect your day trade in Tree, right? Foolish if you let it. So, all right, so that's basically it. But again, you're not, if you're a member, okay, again, in the room or private Twitter, you're not expected to be able to interpret the flow, like I do. I mean, you see me, you guys. I'm at this every day, 5 days a week. Yeah, I'm in this game 20 plus years. Eventually that's your goal. You'll get there to be able to interpret the flow and, take out the information you need to trade according to your game plan 7 days a week. You're right, Norris, but don't forget the chip on your shoulder. If you're not sure or you're uncomfortable or you think you may see something out of flow, but you don't hear me talking about it or mentioning it, don't be stubborn. Ask. Even if you get my thoughts and opinion and throw them out the window, you're at least better off hearing what I may have to say about it just from my experience on it. That's all. All right, so let's get to a couple names here, because you guys are spitting out some names and there's some interesting names out there. All right, here's one. Let me start off with this because a lot of you are interested in this name. I mentioned this during the day. You probably saw it. By no means are they tattooing AMD like they could tattoo AMD, right? We've seen when they want to own AMD, it's almost like a machine buys it, not even humans, right? Okay, but you had a sweep yesterday that creeped in before the bell. Today at what was it, 3:30? All of a sudden, nice little uptick in short dated action. You can see the afternoon close strong. I don't know if they're just playing a bounce or, you know what I mean? They're looking for some upgrade or they're as a conference. I have no idea. But if you like AMD, okay, maybe worth a look here for a trade. Okay. If you don't like AMD, I don't think the flow is worthy enough to play it off the flow itself. AMD trades a lot. All right, but I know a lot of you guys like to trade this thing. It's off a little dip, hasn't been acting too hot, but you know the flow's starting to turn bullish here into the close yesterday and then into the bell today. So something to keep in mind for those of you who are looking at the name. Yeah, SE today caught another bet. Today was a short dated sweep. All right, let me pull up. I got to update the top bet list for you guys. Hold on a second. How do I do this the easy way? I got to update the top bet list. There we go. Look at that. Because there probably could be a couple more names. I'm going to put even more names, not just the top bets on the day, but some names that are seeing buying that have been weak or haven't moved yet. One name I could tell you right off the bat, Workday, because this I put out earlier in the day just to give you guys an update. But WDAY would be one I add to the list. When I'm done with the webinar, I'll post it for you guys. All right, so here's the order in SE. It was just one sweep, okay size. What was interesting about this order compared to some of the others was September. They've been building a position in Jan calls, selling Jan puts. So if we see them, you know, start to come after September's here, that might be a nice heads up that this thing could be in play already. All right, so I would keep an eye out on the action tomorrow. If you're looking to play it off this already, you could, if you're looking for just a bounce. Again, you know what I mean? If you're looking for just a bounce out of SE, it's playable off this. You know, nothing huge, but it's playable. But if, you know, you're looking for more than just a bounce, you want to see, you know, 2, 3, 4 of these here. And I'm getting deja vu because this is kind of similar to what they did this go around here we were talking about, remember? So they started building a position with some time, selling puts, you know, into this. See this little pull? Doesn't look like much now. And then like right about here, that's when they started to come after short dated stuff, you know, and you could see the momentum started to pick up a bit from there. All right, so that's the story on SE. But if you're looking, you know, for anything further out, Jan calls, I would probably piece into them so you don't get it all in one shot. And just in case, in other words, this might have to come in more or play dead more. You know, they're going out to Jan for a reason. All right, so you can, like, for example, you can easily see, let's say even the SEP sweepers looking for a bounce, you could easily see this thing trade up to here and then roll over back down here and do the same thing again, right? That's what I mean. All these things that have been selling, even for example, like a Workday that caught sweeper activity today, they could still be in correction consolidation, but bounce. Nothing goes straight down. Here's the Workday. which looks interesting because you have a niner here, right? You have a niner exhaustion signal there and sweepers here. So you can see this thing trade to here and still be in this thingamajigga downtrend. And honestly, from the flow we're seeing start to come in, some of these things, I think that's all you should be looking for, in my opinion, is snapback bounce trades. I wouldn't, off the flow we're seeing, I'm saying, I wouldn't be positioning for a breakout, in a workday. You kind of want to see SE type action and some dated stuff for that. All right, because these things may still be in breather mode. If the rotation's going to last, they could be stuck a bit. There's been some nice correction in these things. Yeah, TSM tree. I've been saying I wanted to buy this thing for so long, and I never buy it. But yeah, listen. You made money with it. You can't complain. You got out of it today. Yeah, I think that's good. That's smart with the Fed and everything. It looks great. It looks great. But that too, you're going to come up on a niner high here. So maybe she pauses a little. I can't blame you. Good trade. The semis, by the way, NXPI looked like partially a roll. That caught a little more action today. Looked like they were rolling Septembers though. How incredible does this thing look? But you're going to run into a niner high here off this grind. So that's good though. Maybe you get a little pause breather, right? Tree, that would be ideal. A little pause breather off the Fed, and then possibly some flow for a next trip up type thing. That's what we should be looking for there. A few niner highs. Which one, Wes, in the semis or just in general? In general, right? Yeah, it's weird because you got some niner highs and there's some niner lows out there. So maybe they reverse the rotation a bit. Possible, I guess, right? SMH, and let me see, is it a niner high? Yo, tomorrow, unless they break it up. Tomorrow, but unless it gets broken up. And you got ES. May slow things down a bit. But that doesn't mean they fall apart. It just means they may get a little tired over here, Well, it's a weird market because, like I said, you got names like Workday, where you got a niner low there, right? Whereas I'm sure some other semis and stuff like that are close to flashing niners, possibly. Yeah, Tim, we've seen it before. This DIA guy early, and then he cashes a ticket. So we got to keep an eye. You don't need me to tell you. You know that, but we got to keep an eye on the flow, right? A lot of times those shorter sweepers will eventually confirm, when that thing possibly is in play or not. LRCX, let's see, niner high there too. Yep. But look at these moves, Wes. It's a good thing these things are running into niners, because then we'll never get our hands on them ever again. See, like this niner here. Look at this. Look at that entry. So it's a good thing, because I don't know about you, Wes, but I'm sure you agree. Up here, I feel uneasy up here on new entries. Micron, that's another one, right? A little stretched. Micron, WDC. Let's see the Micron. Yep, That's going to run into, so here you had a niner low. That felt like an eternity ago. And then you're going to have the niner high possibly tomorrow. Maybe for a breather. WDC, let's see WDC. Oop. All these names have been so hot. Yeah, there's been a lot of nice runs out there. I'm not going to lie to you. A lot of this stuff, like always, I sold way too quick. I didn't have the confidence in a lot of these things to give a leash to. But yeah, WDC2 possible niner. So all the semis there. But let's look at some other names. Some of the cyclical names. This is a name that kind of has me interested a bit. You have GT, might be the worst stock on the board from the trade wars. Okay, look at this. Doesn't get much uglier than that. And you got a little lift here. If you get a little breather here, and we can see some action, or you probably don't even have to wait for the action, you may get one more lift. So something to keep an eye on. You got some room, not too stretched compared to some of the others. But one of few cyclicals that haven't already really exploded in a sense to the upside. What's some other cyclicals? What's one these damn food names, KR. Look at these things. Look at these things. KHC. I know a couple of you guys had the KHC. A couple of you guys and gals. From the dead. A lot of names like this. The rise of the living dead here. What's another name? Dow, yes, Dow. Wow, that's again, Stoof. That's a niner here. You're talking about names. Here's another chemical name seeing flow, WRK. Look at this. But guys, I really do, if these things are for real, okay, and it's not just one of these short covering rallies that we've seen in the past, you're going to get a breather where they look like they're rolling back over, and then the likelihood is you're going to see flow come in for a move higher. And in my opinion, it's not just going to be one name. Like, in other words, you're not just going to see Dow catch flow and then nothing else. Like, you're going to see it come into a bunch of them across the board. And the likelihood is post-Fed. The likelihood is post-Fed. I could definitely see if the Fed does what it's needed, that they come rushing into these things, banking on a turnaround in the economy. And this is what some of the people are looking at here. So you guys, let me see if I can find it. I got so much crap now. Hold on. So this is what people aren't talking about, and possibly could have pierced the safety bubble, the fear bubble. You know what I mean? So you see how, outside of when? January, right? The start of the rally off the December correction. I mean, this thing has been straight death. And now look at this little giddy up here. All the stimulus out there maybe starting to do some magic. And listen, the beauty is you don't need a rip-roaring turnaround economically, because they've been pricing in death, right? Between the trade war, the inverted yield curve, people have been rushing into treasuries, pricing in recession. So if you get some stability and the consumer already hanging in there, you could get a nice rally. Ultimately, I think it ends up being a bad thing because then the Fed is going to stop participating, but that you got time for, right? You could see it happening, no? Hedge funds are not in anymore, right? They flushed out a good amount of riffraff long and all that stuff. No one's positioned for upside over the intermediate term. Yeah, if he doesn't cut rates or he's a bit hawkish, I don't think the market's going to like that, even with this here. You never know, but then you may get a nice wash, Tree. You may get a nice wash, but you know what, Tree? That may not be the worst thing out there anyway. Exactly. Because then we go back to the old playbook. I don't mind that. I don't mind that tape, guys. I feel like I'm more disciplined in that tape. I got more of a handle, during these times here. Here I get a little uneasy. Yeah, me too, Tree. I get uneasy when I got to chase and not wait for sentiment to get set up. Because it's been a nutty game out there, hasn't been all out bull phase here. If it was a bull trend, then it's a different story, but we got some stuff ahead of us. You know what other name looks good? Cash was talking about it today. We're both in it, some equity. I got the Jans. I wish I had the equity too. I don't know why I dumped it. I know why I dumped it, but I would have liked to hold on to both. This pizza. This pizza. Yeah, looks good. Looks really good. Yep. So if you guys remember, they were a bit early, but it was a Jan missile. So had time for it to even add if you wanted to. And I think it came right here into this little pull. I haven't seen much action in it. Smaller action, some Octobers, no missiles. There was the one Jan missile down here, and that's it. Yeah. Turning around nicely. And that's pretty much cash. So if that Jan missile, that's what you're looking for, That's what you want, not just a little trade out of it. There's easier stuff. Yeah, did you catch that, Pablo? I didn't catch this thing at all. I've been watching them sweep it for literally 4 straight days. And this is my type of setup down here too. Finds a bottom, dead, and then they start buying it. This DXC. Little more flow there today. Neo, I wouldn't fool around with that stock. I wouldn't fool around with the Neo. We've been seeing mostly, believe it or not, bearish activity, even though it's squeezing now. They've been buying puts further out in time. But honestly, it's been so beaten up. There's a lot, if you're looking for cheap stocks, there's better stuff to play out there. You know what I mean? Well, it's a little late now, but I think this, if you're looking for a cheaper play, spec play, was a lot better than a Neo. The CLDR, they were sweeping before Icon. Icon gets in. They're sweeping post Icon. So I would keep an eye on any pauses here too. But if you're in the CLDR, like I mentioned today, I would be try to get a little greedy if you have the time. I sold mine, so don't pay attention to what I say. But if you're still in it, yeah, I know quite a few of you had this CNDT. It looks interesting. This is an icon name too, right, Kent? It caught some action here. I didn't buy it, but some people in the room bought it off the Niner, I think it was, if I'm not mistaken. But yeah, some action with time. But yeah, it looks like one of those turnarounds, without a doubt. But we're keeping an eye on the action. Today they rolled, by the way. There was action in it today. The player added about 100 grand, 150 grand. So new money to roll a position out, September to October. So there was a roll there. Yeah, there was action in the CNDT today, September rolling out to October. Yeah, Dish, right? That was another one at the start, Tim. That was another nice one. Another nice one. That was at the start, caught action with the win. The first ones to start to catch the real action down there. Really nice turn. Oh, we got to talk about this guy. So, Stamp, remember the sweeper activity yesterday? For those of you who are not members, there was a sweeper yesterday who basically built a position in October. He swept it 5 different times on the DL, so only we could see it. 250 lots. Probably more than 5 times it was swept. And that's not even the initial activity. If you guys remember, there was a sweeper prior to that. Let's see here if I can dig it up. Ooh. Where the hell? Oh, here I am. All right, so let's see. Where is it here? Stamp. That's today's. So this was yesterday. And, you know, this, I know people like the big orders and stuff. This is kind of like my favorite type of sweeper activity. And when it comes at the right spot, I really get pumped up, you know? But when they, like, you know, this guy or machine or girl, whatever the hell it is, whether right or wrong, is legitimately making a bet. Okay, you know it. And why do you know it? Okay, because what happens is, comes in, you know, sweeps a 300 lot of the 80s, then sweeps another 300 lot of the 80s, then sweeps another 300 lot of the 80s, right? It's up to 1200, sweeps another 300, some more up to 1700. So you see the accumulation throughout the day, right? One order, I always say it, no matter what, one order can mean anything. One order can mean anything. But when you see the commitment, you know, of buying behind a name like that, is, you know, that's, you want, the majority of the time, that's where you want to ride, where you want to place your money behind sweeps, predominantly. Because more than not, you're going to cash some sort of ticket, you know? So what was interesting about this today, and let me show you, where is the initial activity here? It should be down here somewhere. It wasn't that long ago. Oh, here. Look. The 5th, September 5th, 300, October 80s, right? Then some more on the 5th, pays up to $1.20. So he bought 900 on September 5th. Then comes back September 9th and pays $1.50 from $1.15, right? $1.15. He's chasing himself. $1.20, $1.50 4 days later, $1.60, $1.70. Look what he's doing, this guy. He could have traded him. He could have traded off himself. $1.80, $1.90. Can I get a $2? Can I get $2? $2. Right? And then what does he do? He comes in today and pays $2.50 the nut. Basically a double from his initial buy. He 100% from his initial sweep. Could be. It's possible. But regardless, when people pick up on that action, you get even more shorts covering in fear that he's got something up his sleeve. Could be he's got something up his sleeve. A lot of times that's what we see out of it. Meaning news, upgrade. We saw it in CLDR, icon. That's what I mean by something up his sleeve. You know what I mean? But like Steven's saying, it could be a short who's just getting run over and continues to sweep, but you don't think the market is going to sniff that out and squeeze them even harder? Right? So that's what happens. But that's why it's the best action. And you know, look at this thing. I don't know why, but I thought this thing was going out of business. What happened to that? Jesus. Right into this gap, too. Look at this. What's that? 83.57. So, I mean, at this point now, you know, it would be something, like I mentioned at the start of the webinar, something you may want to just get in the middle of if you see some buying. An example, let's say tomorrow opens up flat or down and you start to see this sweeper go at it again, you know, get in the middle of the momentum of it. But, you know, the momentum likely is going to be less and less as this thing creeps higher, unless we get the reason why we're seeing this sweeper activity. And the thing is this, okay? This is not, he's not sweeping a 10-cent out of the money call here. You know, he's laying decent wood. So even though they're 300 lots, do the math, add them up. You know, he's dishing out some change there. Kroger, wait. Nate, I thought they reported. They didn't report yet? Oh, you still have earnings in the way? You got to be kidding me. I thought you had earnings out of the way. That's why I thought you were in the clear now. Jesus. Nate, it looks, honestly, I have earnings we know nothing about. You know what I mean? Nothing about earnings. All I can tell you is based off the recent sweeper activity has been nothing but bullish. You know, some good looking little sweeps in it, consistent. So you may want to ride it up into earnings and then decide, you know, what you want to do at that point. You know, what a shame. You know, somebody mentioned this to me too today, that they had earnings. I thought maybe they just misspoke. I thought they reported already. Maybe I'm thinking, was it Kraft Heinz that reported? Who the hell am I thinking about? Yeah, Thursday earnings, Gordon, on that Kroger. Shit. Yeah, Nate, now, you know, that throws a monkey wrench into things. I mean, let me ask you this, Nate. What are you looking to do with it? Is it something like you want to write out? If you do, then roll out for more time, just in case there's some profit taking off the number. You know what I'm saying? Give yourself more time. Right. So you made some decent money and you're just holding October's now? Yeah. I don't know. Earnings, I really don't know what. I'm not going to lie to you and tell you I have a good idea of what you should do. Flip a coin. I usually, what I do is I sell the bulk of it into earnings, like if I had October's. If I had Jan's, you know, maybe I'd consider holding through, that type of thing. Yeah, so I'm not going to lie to you, Nate. I don't want to lie to you and pretend I know what I'm talking about. Wes is saying he likes to create spreads sometimes into the number. I guess it all depends. You know what I mean? It all depends what you're looking to get out of it. But what I would recommend is if, like that October piece, you mentioned that you made money with it, I would roll it out further so this way you don't have to sweat earnings and you could just hold it longer, you know, if that's what you're looking to do. Because no matter what, Nate, if you're looking to pick up some money off what you have left in this thing, you're gonna have to hold through earnings eventually. You know earnings is gonna get in the middle of a big move if it comes. If you're looking for that type of move, so I would just maybe take some more chips off and roll out. Yeah, roll into gens. That's what I would do. Tree, I thought of you today. VST had a little bit of flow, nothing major. But stock looks decent, right? No problem, Nate. Stock's had a nice run. Very nice, Tree. I remember when you were buying this thing. That's a nice move. Be good, Mr. Cash. Yeah, down here, I remember. TSN buyers clean. Let me see what you're talking about, Frank, here. I remember the TSN orders. Hold on. I'll tell you exactly right now. Oh, it was a block. September 13th. It was a block. Let me see if that's why I didn't mention it. What time did it go off? 10:49. Looks like a 60,000 share block traded with it, Frank. So it might be tied to that, replacing that, in other words. Yeah, it was a block. That's why I haven't mentioned it. You know, I did see some smaller put selling weeklies in it. Let's see, where was that? 1,000 of them. Weekly 78 puts. Maybe trying to put in a floor, Frank, for the rest of the week. But I wouldn't trust that October block. I would wait on a sweep there if you're interested. I like it too. I like this dip here. They buy dips in this thing a lot too. Yeah, Frank, they've been buying dips in this thing. So I would wait on a sweep. Visa did see action. Mostly put activity though. There was a little call flow that crept in, but it's been mostly put sweepers in the Visa. Mostly yesterday, to be honest. Mostly yesterday. Visa. Yeah, these things all needed this thing too. This was another parking spot, right? Even in corrections, this thing barely went down. Just continued to go higher. These things, I mean, this doesn't go on forever. It's ridiculous. You know, they gotta correct. That's why it wouldn't surprise me. It may not come now, okay? Maybe it comes later this year, but there's got to be something. This is what I'm talking about, like this. There's got to be something like this. You know, you get rallies where bulls think they're back and okay, and you know, rolls over. You get some sort of downtrend. You know, eventually there's a bottom. All right, there's another rally where you think it's still in the downtrend and it breaks. But it's more time than anything else. Like you see, this was what, October? Well, this was with the market, October into January. But that would be totally normal, you know, totally normal. These fear safety trades, stability trades, whatever you want to call it, flight to safety, they've been long in the tooth. You know, long in the tooth. But, you know, we don't want to jump the gun because this doesn't necessarily have to be it, even though it looks like it, you know? Doesn't have to be it. It's still too early to tell. You know how you're going to know? You get a little, let's say even if there's a little more weakness or it starts here, you're going to rally and then that rally fails. And they start underperforming while, cyclicals and that stuff may be making higher highs. These things, get caught in a web. Like, remember the software names we were talking about for several weeks now, that they were just like caught in a web, right? They were so hard to swing for any decent profit because every time you were looking for a little extra out of it, it got caught back into the web, right? And it appears like it was going higher, but it wasn't clean. Like, it was. So that's the worst type of stuff to be positioned in, because then when you get caught in this, you gave it all back. CRM, classic web, you're 100% right. Look at this, right? Like, this is normal bullish consolidation. Look at this. Classic web. You're 100% right. Workday hit because of ZS. Oh, ZS earnings. Yeah. Is that totally tied to ZS Niner? Where's ZS down? Oh. And you said they beat, right? And they're just selling off because of the group heavy? So where's this down to? 50, 49.50. Let's see, 49.50. Oh, that's over here. So basically filled this gap, right? That's, you want to hear funny? Future outlook bleak? Uh-oh. Really? Look, this is where the Drunkenmiller sweeps were, I think. Those Decembers, if you remember. So it's back down to that level. Starting to see large deals close. Wow. Interesting. So all the software names you think will be weak tomorrow? Maybe there'll be some buying opportunities there. Workday, yeah, looks like off a bit with the ZS. Yeah, we'll see how it opens up tomorrow. I mean, if they buy weakness, that could be a good sign for a snapback. This thing though, a buck or two in this thing is peanuts. You know what I mean? This thing moves drastically, right? Like, this thing can bounce to 185, which is $10, and still go nowhere. These things are big movers. Yeah, really nice close today. I didn't realize ZS earnings tied to software. You never get away from earnings, right? They're always around. Tesla looking good, right? Tesla looking good. So Tesla had a little bit of flow, nothing major. You might run into a niner here. I don't know if that matters in Tesla. It might. Yeah. But Tesla's looking good. The which caught a bounce sweep? I want to check open interest to just be 110% sure. But the Netflix caught a September sweep, short dated, but some decent wood behind it. I think it was like 400 grand. A lot of sellers in this thing right now, though. But she can squeeze. So we'll see what that looks tomorrow off open interest. I would keep an eye on further action there. Yeah, the 290s. What you really want to see is them come after it, kind of. But, if it catches a decent sweep or two and you think you could get a squeeze out of it, it might be worth a shot. Anybody else have any names before we wrap it up here? Any other names that they've been eyeing or that they've been trading, even worth looking at for a dip? Yeah, AMD we started off the conversation with, and I mentioned if you like the name already, I think it's worth a look off the flow. If you're not eyeing the name, I don't think the flow's worthy enough, you know, but somebody's making a play on it without a doubt. Somebody's looking to play a bounce in it. Any cat news? Cat had news aftermarket? Oh, any cat sweepers? There's been little speck sweepers in the cat, nothing big. This thing's had a hell of a run too. Look at this. What a move. You know, considering how beat up it is, this move is nothing. Yeah, small sweeps in this thing. Again, what we want to see, you want to see this thing eventually get tired out, right? Come in a little bit, and then maybe after the Fed, bink, you know, they hit it on a pull here. And then put seller, good call, Nate. There was put selling in cat. Good call. I almost forgot about that. Yep, there's been some decent put selling. So you want to, you know, once this thing gets tired, come in a bit, and then hopefully we see some action. And then you get the higher low type setup, you know. I missed a lot of these things off this correction. We went through this already, you know, kind of ran away from me. I wanted to make a play on EEM. I never did down there. There were a lot of stuff I'm kicking myself that I didn't get my hands on. I wanted to own more win than I bought. I didn't. But what are you going to do? It's part of the game. Tim just posted one of the small sweeps in cat. They were weekly 122s. Yeah, Nate, a lot of this stuff took off before you can get two hands wrapped around it. I think the cat, let me see, I could probably find it. The cat, the big sweep, I mean the big put seller in cat, what month was it? Let's see. Here it is. October. That was on September 3rd. Look at that. You want to see where that put seller was? You talk about spot. September 3rd, right here, right? Jesus Christ. Unbelievable. Yep. So anyway, that's why, you know, guys, as much as, you know, bull markets are fun, right? But, you know, you never know when the music's going to stop. You got to pay attention to bullish sentiment. People are too bullish. I don't know, maybe it's me. When you're coming out of these type of like corrections or consolidations, there's nothing better, you know? Because you're getting stuff off pulls, you know, at better spots. The problem with me is I always take the trade, which I look good on initially, and then, you know, this always gets away from me. I'm never satisfied with what I got, you know? Nate, you're a disciple? That's good to hear. I need all the disciples I could get, Nate. Yeah, this pop got away from me, Tree. It got away from me. You know, if you remember what we were hoping for, here's what we were hoping for. That this would have even just came down a bit one more time, right? That's where we wanted, and that's where, think about everything that you owned, you would have probably owned more off this little pull if we got it. That's right. Because here's where the majority of the buying we were doing off that sentiment signal. Okay. That little pull there off weakness, if we would have got flow, that's where, you know, you would have basically added on to any longs you had, any new names or to ones you had already. And then now you'd be sitting pretty. But what are you going to do? You can't, listen, you can't complain in this game. right? We were talking about it. If you found a way to make money throughout this process here, and the complaint you have is that you didn't make enough, that's a good thing. You know, we don't want to get stupid here now. Exactly, Tree, what you were telling me, you know, a little earlier, right? You feel a little uneasy. You don't want to chase. You got the Fed in the way. So relax. Day trade. There's stuff to day trade. Make a little bit of money in the meantime. And then hopefully we have a better setup coming out of the Fed. That's all. We'll get it. You know, it doesn't take much. All right, ladies and gents, always a pleasure. All right, enjoy your evening. Anybody who's new, there's quite a few people on here. I appreciate you guys coming out. WallStreetJesus.com. If you want to learn more about what the hell I was talking about throughout the webinar, there's a strategy section, market update section, some free info. And if you're interested in a trial, 3 free day trial, no credit card. Thank you, everybody. Good luck the rest of the week.